We don't talk a lot about utilities on this channel. I think that sector is often overlooked by a lot of buy and hold investors who think of themselves as more growth investors. But we do see low volatility investors, those who want to dial down their equity risk. You see them kind of looking at utilities from time to time. So what can you tell us, Tony, about investing in the utility sector right now? What can an investor expect from this sector?
So these stocks have been called widow and orphan stocks for a couple decades now. And that's because back in the day, a lot of money managers realize that these are lower beta. They tend to fluctuate less because the operating structure is very interesting. They have a lot of that debt up front, and the way they can make money is in two ways. They can either hike their rates, which for many of these are regulated. There's a certain amount that the provincial regulator allows them to hike how much they can charge you for water, electricity, and gas each year. So that's kind of a cap on their growth. But moreover, the other way that they can grow is through the rate base. So utility might expand into a new plant, into a new area. There might be more people moving the area, for instance, from immigration, so you have more hookups. So these are the two long-term growth drivers that we can expect. The other plus side is that while they're not required to pay out a significant portion of their cash flow, many utilities do, because the opportunities for them to reinvest those excess earnings into, like new development is less efficient than actually borrowing, especially when rates are falling. A lot of utilities executives, if they're smart enough, they'll realize this, which is why you see them giving that cash back to you as a quarterly dividend, sometimes monthly. And the mentality is that if we can't reinvest that money at a rate of return higher than our cost of capital, which for utilities is pretty high, it's better off in the pocket of shareholders to do as you wish. And some people reinvest them, but with the average utility in Canada offering yields north of 3%, that is now with the recent rate cut higher than what you can get from the risk-free rate. So we're seeing quite a bit more interest in that, especially as investors get more defensively minded, given that the TSX is once again at all-time highs.